So we are recording this webinar, 8:30 a.m. in Texas. Don't mess with Texas. All right. About 30 seconds and we're going to move forward. So let's see. There we are. All right. I think we're we had a lot of registrations for this webinar, and the capacity is only 100. So I think we're going to have a full house for this webinar. I'm Jay. I'll be your host for this webinar on this November 22nd. This webinar will probably be about 2 hours. I know the time slot allotted is an hour and a half. But depending on the questions and where people are at in their trading and participation, that'll determine how long we go. Basically, the webinar is going to be broken up into two parts. The first part of the webinar is basically going to be introductory, where we're talking about the NOF, the indicators, and just going over what those are. And the second part of the webinar is going to be geared towards, one, developing a checklist, and I'm actually going to give you a checklist on how to use the NOF, at least how I use it, and you can mix and match whatever you like from the NOF, and you'll be able to incorporate that within your trading. But I wanted to give you guys an outline so that when you purchase the NOF, you could theoretically start using it right away. Morning, Chris. We've got over 30 hours of video in the member section, which does go through the indicators, does go through a lot of the basics of the footprint and bid-ask, and also how to use the NOF specifically. But I want you to walk away today with an idea of exactly what the NOF is, and an idea of how you could use it and incorporate it into your trading very quickly with just a simple checklist. And the reason I wanted to give you that checklist is because it's what I use. I basically have a checklist. There's over 13 indicators in the NOF package, and it comes down to a matter of what do you like, what suits your trading style, what suits the instruments that you're into trading. And so I'm going to give you that checklist, and also we're going to go into some more advanced entry techniques in the second half of the webinar. So first part of the webinar, introduction, going through the indicators, talking about them, what they are. Second half of the webinar, the checklist, and showing you many examples and chart screenshots and videos of trades that I've taken, and you can see exactly how I'm using the NOF personally. So you guys that are already NOF owners, you can sit back, relax for the first part of the webinar. Those of you that are new, I would encourage you to pay attention as much as possible. I'll try to make the webinar go as fast as possible, but I've noticed that on Saturdays we get a lot of participation and we get a lot of questions, which is great. And if I don't have the answers for you, I will find out for the next webinar, or you can email me or Skype me with a follow-up. My Skype, the order page, my Skype, and my email is in the go-to chat. So your go-to chat will be flashing. I'll just put that up again. And yeah, without further ado, let's get going. All right, so no discussion of futures forex or options trading, or any financial instrument trading for that matter, would be complete without a discussion of the risks involved. There is risk involved in trading and investing in financial instruments, and you can lose money. Therefore, you should only trade with this capital. That's capital that if you were to lose that capital, it would not affect your income or your lifestyle or your retirement plans adversely. All right, always consult a financial professional before making any investments. And please understand that everything we do and say here during this webinar, in our member section, and any promotional videos or promotional material, emails, etc. Is for educational purposes only. No guarantee of income is being made today or in any of those materials, neither is any solicitation of any security being made today. And I've actually told people that I've actually done one-on-ones with people, and I've actually had to tell them that they probably shouldn't be trading at this time. So I'm willing to actually tell people that it's not a good idea to move forward until they're in a better financial situation. So we're dead serious about this, or at least I am. I know Kai is too. So, all right, webinar recordings. All the webinars are recorded and uploaded to YouTube and are sent out at the end of that week. That can be as late as Sunday or Monday, since we do have this Saturday webinar. They will go to all the people who have registered. So if you're here, or if you didn't make it, then you should be watching this probably on YouTube at some point in the future. So you should register for all the webinar events, even if you're not able to attend, in order to receive the recordings. If for some reason you don't receive an email with the recordings, check your spam or junk folder before contacting customer service. Okay, just makes sense. If after registering for all the webinars and you check your spam and junk folders and you still haven't received any of the links to the recordings, please send an email to customer service at ninjaorderflowtrader.com. Don't send it to me because I don't have them. Send it to customer service at ninjaorderflowtrader.com. Everybody clear on that? Can we move forward? Yes, we're moving forward. So my goal, I guess my hope, is at the end of this webinar. Hey Rich, nice to have you here. My goal by the end of this webinar is to help you see the light at the end of your trading career or tunnel. I want to help you see the light at the end of the tunnel with your trading, okay? And it doesn't matter whether you're still losing, whether you're break even, whether you're already consistently profitable. Everyone can make an improvement through using the NOF toolkit. Like the man said, Men's Warehouse, remember that guy? I guarantee it. I'm not guaranteeing income. I'm not soliciting any security, but if you use the NOF, you go through everything in the member section, all the videos, you attend these webinars, and if you can't make the NOF work, there's something wrong with you. Because I know Kai is probably teaching it to his son already, and I'm already starting to teach my son, and my son's 4, and I think Kai's is a little bit older than that. And he tells me every day, it goes up and it goes down, and it goes up and it goes down. And I ask him where this is, and he points to it, and where that is, and he points to it. So if he can learn to do it, anyone can learn to do it. Besides, I don't want to be stuck in front of the screen the rest of my life. Wait until he's maybe 12 years old and let him take over. So the bottom line is, we believe we can help you succeed as a trader. All right. If you're not seeing the light at the end of the tunnel in your trading career, we can help you. If you're still struggling and trading using lagging indicators, the NOF can definitely help you. If you're challenged when reading the footprint, or what's called the bid-ask ladder, or the tape, the NOF can really simplify how you read it. If you're profitable already, the NOF can move you from good to great. So never mind what I'm saying and what I'm doing with the NOF. For starters, this is a screenshot from one of the NOF users, okay? And you can see what the user has done. Actually, the audience view isn't updated yet. Is everybody seeing the chart now? You guys should be seeing it now. Okay, everybody seeing the chart now? Okay, good. Sometimes there's a little bit of a lag. All right, thanks, Skip. Thanks, Trader M. Hey, Nestor. Buenos dias. All right. So this user, whoever it is, I don't know who it is, but they're using the NOF, and they have identified up at the top potential institutional block sales. It looks like they're using Think or Swim or some other platform to execute. And so what they've done is they've placed, I guess, where they've taken a short here at 44 on crude oil. And hey, Ismail, they've taken, this is a user's chart, they've taken a short here at 44, it looks like. I don't know what the result it was of their trades, but they're showing us how they, and that's open eCry. Okay, thanks, Jack. They've taken a short there at 44 after identifying through the NOFT institutional block sales, all right? And the market sold off very nicely. It looks like that was probably, looks like 60 ticks, somewhere in that range, okay? And looks like they took another short here at 02, and that would have been good for another 20 ticks. So never mind what I'm saying or anything that you're seeing or hearing in the webinars. You know, these are our users sending in these screenshots, all right? And they're the ones showing us again and again. You know, once you become proficient with this, how powerful a tool this can be. So that's one screenshot. Here's another screenshot. I showed this in some of our previous webinars. But here's a zone. We saw institutional block sales on the previous screenshot and how the user had identified those. This particular user here has identified stacked aggressive sellers in this area. And those stacked aggressive sellers have come into what we call an imbalance zone. Okay, a stacked imbalance zone. So previously there were aggressive sellers in this zone. We come back to test this zone. We get aggressive sellers coming in, and the market starts to sell off. Okay. Here's another screenshot. Just wait for the screen to update. Am I going too fast, too slow? Anybody who's coming late, all I'm doing right now is going through examples of charts that have been sent to us by users of the NOFT. Okay. Too fast, too slow, just right? Okay, we'll talk about all that later, Chris. Okay, I just want to show you what the users are doing. Okay. Just right? Excellent, Bruce. All right. Hey, Andreas. All right. So here's another screenshot. All right. This user here has identified a stacked imbalance of aggressive buyers as they test the previous low of the day. Okay. And you can see that identifying those aggressive buyers that came in, we got a 20+ tick move off of that. All right. So as we go through this, you're going to start to get familiar with some of the coloration and some of the things that we're talking about the NOF. But I will go into we'll go into detail. That's what the first hour is going to be about. We're going to go into all the indicator details. The second hour is going to be the checklist and how to use it, and example after example after example. By the time we're done, you should be brainwashed. You will go buy it. You will use it, and you will be the most profitable trader that you can be. All right. It's late for me, so get a little giddy at night. Yep, easily identifiable, isn't it, Kevin? Easily identified. Kevin is saying that lots of aggressive sellers on the way down and very little aggressive buyers. I mean, if you just looked at this chart, folks, and looked at all the red numbers on the way down, and look on the other side, do you see any blue numbers on the other side, or green, pardon me, green numbers? This person has them colored coded to green. Do you see any green numbers on the other side? You got like one here, and then a sea of red. One green here, a sea of red. A sea of red. And then all of a sudden, a sea of green, one red, a sea of green, one red, more green, some more red, but they can't get below this initial sea of green. another sea of green, and one red or two reds. Okay? So, just looking at that, okay? Just looking at that, it was very clear that we are probably going to get a bounce here. First of all, it's very clear that we're definitely in sell mode. We know, whoops, I'll go back to that chart for a second. It's very clear as we sell off here that, we're in sell mode. There ain't any aggressive buyers in here. I'm sorry for using the word ain't. It's an Americanism that I picked up over time, okay? There ain't no buyers in here, all right? Okay? They're not there, right? We come into the low of the day, and then all of a sudden aggressive buyers show up and the aggressive sellers disappear. So just looking at that, it's pretty logical, isn't it? Isn't it pretty easy? One of the things I like to do as we go through the webinar and I talk about these indicators is to actually teach you how to use them as we go through. Okay? All right, let's go to the next screenshot. We had aggressive sellers coming into this R1 level. Anybody use pivot points in here? We'll get to it, David. Okay. I'm just showing examples of screenshots of what members, users, actual users, people who have purchased the NOFT. I'm just showing you what they are doing. Okay. I'm just showing you that it's, with a little bit of work, that it's easy to use and it's very logical. So I will go through all the indicators, but I want to just make it clear that I'm not just selling this to you, okay? I want to make it clear that it's possible to use this and to use it, with a high rate of efficiency. So we come down in here, pivots, all right? If you're using pivots, here's a pivot, R1. Come back to this R1 pivot. We come in on heavy selling, and guess what? They can't get this thing to bust through this 79.24 level, okay? It pops that level by one tick. Exactly, that's exactly. Sellers got cut off by absorption of buy limit orders. What this person is saying is that as we came down, we get aggressive selling into this area, and we can't punch through. What that most likely means is that there are a lot of limit orders sitting here, okay? So if you get this kind of aggressive selling coming into an area and you can't break it, that means there was probably a lot of resting orders there. And then, once it's clear that we can't bust through, yeah, the 0 on the bottom, that's just an end of the auction, okay? But we'll get into that. Then you start to see the aggressive buyers coming in, aggressive buyers, okay? Yeah, what this, Kevin's got a good question. He's saying, what are the red arrows representing? Well, there's another thing. Well, since you asked about it, I guess I'll have to reveal what that is. Most of you probably already know. This is just a delta histogram, okay, down at the bottom. So what this user is pointing out is that as we came into that area, you get a big down bar within the delta, and then all of a sudden the delta just starts to go way up, and we get past 0 on the delta. Okay, so there's a divergence there. And the same thing on the volume. You get a big volume coming into that R1 area, and then all of a sudden the volume just gets shut off. Well, if we're going to continue below there, the volume shouldn't be getting shut off. Okay. Yeah, exactly, Skip. Divergence on price and volume. No problem, Najam. Welcome. So another user, this time on the bonds. Okay. Just let the screen update. We got a lot of people in here, so sometimes it takes a little bit longer to update. Is everybody seeing the bonds chart now? One moment. All right. So again and again, user after user, using this chart, using our NOFT package is identifying what the market is doing and seeing who's aggressive, where there's unfinished business, where there's block trades, where there's trade size, and where there's blocks of those block trades and blocks of those aggressive traders. So here on the bonds, we're selling off, and I don't know what these lines are here. Okay, this is some user's line. Obviously, they have some significant meaning to the user, I would assume. All right, because there's not really any explanation or notes on the chart. But again, the same thing. We got red, 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 red. I don't see any green or blue, however they've color-coded it. Red, red. We got one blue in here. Red, red. Where do you guys think this market is going? This is the bonds. This is the 10-year ZN. We're going down, baby. All right.
Hey, Jay.
Hey.
Hi. Good morning.
How you doing? Welcome.
Good, thanks. Hi. Thanks. Actually,
Late.
That's my chart.
That was your chart?
Yeah.
The bond chart? Okay, I'll go back.
Yeah.
Here's Kai, everybody.
Hey, everybody. Good morning, everybody. Yeah, that was very obvious during the consolidation periods. If you just sit there and you count the large aggressive sellers versus the large aggressive buyers, it kind of gives you a clear direction on the breakout. And that was, if I'm not mistaken, that was the ZN back up at 116, I believe. And it came in about 70 ticks, and then continued over 100 ticks from this initial move right here. I don't think I showed another snapshot. I'll have to grab it, because I do think I took it. Took a snapshot. But I was just showing how easy it is to identify what direction the market's going to go before it goes, just by counting the large sell imbalances.
Yeah, exactly.
And I just said to myself, can it really be that simple? And I don't know. I mean, maybe it is. Who knew?
Looks like this is a 987 tick.
The time frame, yeah, 987 tick, and I'm also using a 30-minute chart on the ZN. Real thick instrument, real nice, because you can get in, no problem. And it trends unbelievably. So it's not something that you get into, get ticked out, and then it goes in your favor, right? It's something that you get into after it's, either before or after it's clearly shown, and then you could just stay with it.
Excellent.
Cool.
So, I mean, that we were kind of laughing about this earlier. I mean, it's just, it's just obvious, this is just with one aspect of the indicator. And what I'm doing here, Kai, is I'm not, the first part of the webinar, first hour, I'm going through all the indicators, and part of that is showing first what our users are doing, what people are doing who actually have the NOF. Because you and I can sit here and talk about how great it is. And if you guys know the history between myself and Kai mentored me. And in particular, Kai mentored me with the footprint chart, getting familiar with the bid-ask, what to look for, identifying block trades, identifying areas of unfinished business. These are the things that we always used to have to do manually, that were such a pain in the butt and made our homework so much longer than it needed to be. And I guess, the bottom line is for Kai, and, you can chime in any time, people weren't, I guess, getting it. Some people like myself, I'd get it. Block trades made sense to me. Unfinished business made sense to me. Those kind of things made sense to me. And I guess Kai has mentored a lot of traders on the professional side and on the retail side. And, some of them just weren't making sense of this. And so putting it into this package, I guess for me, I have such a great appreciation for it, because I know what went into it, and people come in and they think, well, okay, it's just another indicator. No, I'm telling you, it's not. And once you learn how to use it, you can never go back. You know, that's when your blinders are taken off. All right, and there's lots of different footprint packages out there, but none of them have all the different aspects that we have in this package. So what are the large order numbers in white? The white is just the pale blue, I guess. That's just the volume point of control, Mitchell, for that particular bar. Okay, that's the point at which the highest amount of volume was traded. So the highest number of contracts were traded at that price point within that particular bar. So this is a 987 tick chart. So each bar, as soon as you get a 987 ticks, then a new bar forms. Okay, well, that's going to give you the highest volume point of that bar. Here the large red numbers are. Hey, Angela. Yeah, the large red numbers, and we're going to talk about that once I get through these users' screenshots. That's imbalance, and we'll talk about that in a minute. All right, so again, you can be successful using this package. All right, and the education. I think not only is the indicators in the package a really great package, but also I think the education that comes within the 30 hours of video, 30 hours plus video that's in the member section, and also the webinars that we continue to put on and the one-on-ones. That's the real value in addition to the indicator. Bad audio. Test. Audio test. All right, I'll try to adjust there. All right, is it better now? It's a little bumpy. Okay, maybe that was just better now. Okay, it might have just been my mic. Maybe I had the mic just a bit too high, so you're probably getting the heavy breathing as opposed to the sound. It's like when I was a kid, you get those prank callers, the token heavy breather. Oh well. I was cutting it out. Okay. So are we all good? Can we continue? Is sound good now? Yes, no, maybe so? Yes? Okay, all right. We're moving on. All right, so here's another user. All right? Come into what we call an imbalance area, a stacked imbalance area. This is automatically drawn on the chart, okay, for you. All right? It's a stacked area of aggressive sellers, all right? And what happens? We only get a few ticks below it, and then all of a sudden, aggressive buyers show up. This is a situation where you have where you're getting aggressive sellers stuck upside down, and those situations are usually awesome because it means that they're going to have the aggressive sellers that were trying to push this thing lower. They're getting trapped. They're going to have to exit, and that just fuels the move higher. You can see this person entered at 78.44. Their maximum drawdown, I don't know exactly where their stop was originally, but their maximum drawdown on this trade, I believe, was 5 or 6 ticks maximum. And by the time they took this screenshot, they're already up at 78.57, so they're already up 13 ticks by the time this screenshot was taken. So again, I can show you screenshots. I can tell you how great the NOFT is, but I mean, thank you to our members. They're the ones that are proving that it is. And Kai will tell you he's never had a tool or an education package where before
I've never seen it with better success.
Where so many people are having so much success, and they're doing it quickly, aren't they, Kai?
Well, I don't know if it's quickly or not, but whether they've had 5 years experience, 6 months experience in trading, or 10 years experience trading, they are finally seeing that this is a reality for them. And it saddens me a lot when someone doesn't get it. So I make it a point that anybody who is having difficulties to reach out and show me a chart, I swear it could be as simple as a 10-minute Skype chat, or send me your charts that are marked up. Kai, where am I going wrong? And can you go back to that last screen? And I want to give you guys a quick example. I really want everybody to make this, because I think we can build this, I can build this into an amazing hedge fund with this strategy. What you have to do, everybody, is you have to start learning how to anticipate that a trap is being set, because there's always one being set in the market. And if you can't identify the trap, you're most likely going to end up in the trap or part of the trap. And what I mean is, start using what you used to do, which is shorting double bottoms, buying double tops, buying in value areas, putting trades on in value areas and just getting chopped up. Start looking for the reverse of things to happen. Contrarian. Turn your chart upside down if you have to, literally. Because what you want to start doing is, you want to remember there's 90% failure rate out there. And someone told me 95% failure rate. So take advantage of that. This is the tool for you to take advantage of others now. Because unfortunately this is not, fortunately, this is, you either get it or you don't kind of market. So if you start to see very, very heavy, aggressive red numbers coming into a level, a low volume node, coming outside of, a value area, whatever level that you have, start to anticipate that if you don't see the price action trade or continue in that same direction, look for a reversal. Those are the best trades, and those are probably 90% of my trades, are catching the other traders offsides, because those will help the market propel to the reverse direction, and you're in it. And it happens so quickly. And I hate sitting in a trade and just watching it and watching it. I really want to get in, take advantage, and get out. Because no matter what you do in the market, there is risk. But if you can identify those that aren't in the know and take advantage of it, it's so much easier. But you really, really have to stop selling when you see large sellers, buying when you see large buyers, when it's in the wrong trade location. That whole trade location is the homework levels. And I will go through that in detail in live charts during the very first live sessions. And we'll go through multiple examples. And by the end of the first live session, you should be well on your way. Okay?
And their first live session is part of the NOF package, correct, Kai?
Yes, they get 2 live sessions of part of the NOF package. That's correct.
So you guys get two live sessions with a person who has traded at hedge funds and at institutions, the big banks. Okay, so you get that as part of the NOF package. You cannot underestimate the value of that, having someone who has actually worked on the inside and knows how the market works. Okay. Somebody's asking how long are those sessions, Kai?
Yeah, those sessions are, they're a few hours long, 2-3 hours.
Excellent.
Kevin, 7 ticks. 7 ticks is actually too big of a stop. We need to improve your entries, because the probability is so high that literally you should be reducing those to 3 to 4 ticks. 7 is way too much. But please, if you're doing 7 ticks, just keep in sim. Don't take live trades if you have to have 7 tick stops, okay? Excellent. So don't worry about you getting stopped out. Learn from it. Take a snapshot. Every time you get stopped out, mark it up send me over some snapshots. All right? And I'll probably be able to jump on a Skype with you or something. Well, that. I guess knowing your settings are correct are really important. Let's send me a snapshot of your settings. Send me a snapshot of your trades, and I'll get you straight.
Okay, someone is asking if they've already purchased it. Do they have they still have they're still entitled to their live sessions, aren't they? They've already purchased it. And you never booked a session,
Yes,
Jack?
absolutely. Yeah.
See, it goes back to what you were saying earlier. It goes back to what you were saying earlier.
There's one.
Okay.
Yeah, go ahead.
And that's you know what, I honestly I get frustrated with the situation where I'm not frustrated at the user. I get frustrated because I know that if they contacted yourself or contacted myself, we can help them through whatever challenges is they're having. And we're not just saying it. I've done one-on-ones with people, and I've told them, okay, if you have any questions, contact me, Skype me, email me. And we're not just putting it, we're putting it out there because we believe in this. So we will actually follow through. If you contact me, I will call you back on Skype or email you, set up a time, and we'll do a go-to meeting or some kind of remote session, or even just talk and figure out what's challenging you. The second thought I had is that specifically what you were mentioning, Kai, taking screenshots. Another way to do it is to video all your trades. Okay, if you have any kind of screen recording software, or there's free versions out there, record your trades. A lot of you have seen a lot of the videos that I've been putting out. Well, I think nothing is better than seeing that in real time, seeing what the market was doing, kind of reliving those moments and saying, okay, yeah, that's why I moved my stop here. Okay, this is why I got out. Okay. So I would highly recommend, if you get nothing out of this webinar today, start taking screenshots and start videoing your trades. Okay. All right. Anything you want to add to that, Kai? Before we continue?
No,
okay.
please
All
continue.
Right. All right. So somebody was asking, where if you're talking about trade location, what are you talking about? Well, David, it depends on your style. It depends how you were trained. This trader is obviously looking for a previous low of the day. Okay. I showed earlier examples with pivots. Okay. Volume point of control, sure. Value area high, value area low. Whatever it is that you're using, Fibonacci, whatever it is. Okay. The point is that you need something to confirm those levels. Okay. And the NOFT is awesome at helping you confirm that yes, there's a high probability we've reached a top on this swing, or there's a high probability we've reached a low on this downswing. Okay. No more. Neither Kai nor I have any affiliation with that group anymore, Mitchell. Okay. All right. So again, everything that I've shown you has been users' screenshots, with the exception of Kai's screenshot. I didn't know that was his. All right. So these are some of the comments we're getting from some of the members. All right, and I've just put their initials in. All right. DC 30 ticks out of this signal. Gotta love this indicator. I've had 20 trades today, one red one. Insane lucky day. Thanks, my first 100 tick day ever. And this goes back to what Kai was saying earlier. He's never seen people have this much success, with the combination of the package and the education that's included with it. All right. And I really, I said, a lot of people are having success quite quickly, and it really boils down to the preparation and hard work that they're doing. Okay. And Kai has said here, and by the way, luck is the result of preparation and hard work. All right. I'm done. No more trading today. 126 ticks today. We had another member. They're obviously trading a little bit heavier contracts, I would think. They're taking 10 contracts and they took 10 ticks, so there's 100 ticks right there. I trade equities only for now. What platform does it work with? Cost of the NOFT. Thank you. We'll get to that towards the end, Brian. It does work for equities. Kai is actually trading equities, and we do have a partnership with an equities firm at the moment to be able to trade firm capital. Okay, so stocks, ETFs, it works. If you want to advance check that out, Brian, you can. I'll just repaste the link, the order page within the chat, and you can go check that out. All right, we're 41 minutes in, 42 minutes now. Let's keep going. And as you can see on this next screenshot, whenever it updates, there it is. Okay, on this screenshot, you know what's cool about the NOFT? One of the many aspects of it is that almost every indicator we have is customizable in some respect. All right. So colors, you know, length of lines, thickness, fonts, you name it, alerts. You know, it's got something in there for you. It's all customizable, and you've seen all the different kind of chart styles throughout the webinar so far. Yeah, please understand, folks, if I miss your question or I skip it, it just means that we're either getting to that quite quickly or it's going to be in another part of the webinar. So thanks, Skip, for asking. You're welcome to ask questions as we go through. Just please be patient, because I've told you that this webinar will probably go 2 hours, because every Saturday webinar that I have seems to be going around 2 hours or more, simply because I actually will go through all the questions, and I'll continue to go through example after example until it gets through to those that are like me, a little bit hard-headed. All right, another screenshot from a member coming through in a second here. Come on, update, buddy. There we go. All right. That's what Kai was talking about earlier. Those are the live sessions, Jack. Okay. Those are the sessions you get with Kai that are included with the package. Okay. You know, and Kai has already explained that they'll probably end up, you know, being a couple hours, 2-3 hours each session. All right. Yeah, we'll get to it, Mitchell. We will. Okay. So here's a situation. Again, what has this member identified? They've identified a trade location, the high of a day. So we're testing the high of the day up here. Okay. 77.83. I guess that's the high of the day up there. Okay, by this user's indicator set, I guess. And what happens as we're testing this high of the day? We get stacked sellers coming in and stacked aggressive sellers, and we just sell off. And there's no, you know, there's like one green in here. Come on, this is going down, buddy. Joseph, yeah, I'm holding off until the end. I'm sorry, but I'll hold off till the end. You've got the link to the order page as well. This webinar will be recorded, and as soon as I get it uploaded, I'll actually upload it to my Google Plus or to my YouTube channel, and I'll send it out to you. So just email me, Jay @ninjaorderflowtrader.com, or Skype me, jay.noft, jay.noft. Okay? And I've pasted all that information in the GoTo chat already. All right. So here we go. Here's another example coming through the pipeline here. Just wait a second and it'll update. All right. Here we go. Pivot point. Here we have the central pivot point on this user's computer. We come up into this level. All of a sudden, we start seeing aggressive sellers starting to come into the market. Okay? What does the market do at the pivot point? We see aggressive buyers. We start seeing really aggressive buyers the green ones, the 102 and the 123. Those are heavier aggressive buyers, and look, they're getting trapped. We got one last aggressive buyer here, and when I say buyer, I'm actually talking about all the contracts that are on the buy side and all the contracts that are, and on the sell side, I'm talking about all the contracts that are on the sell side. It's not one individual buyer, obviously, but obviously there's some heavier buying or selling in there. Okay, so we get one last chance, this 124 around this 77.41 area, and no, it can't keep it together. Aggressive sellers coming in, boom, down. All right. Yeah, well, I talked about that earlier. For anybody that wants to know, that this user has their, you can, again, it's all customizable. The volume point of control, or COT as some people like to call it, is highlighted in blue. That's the point at which the most volume, the highest number of contracts were traded. So on this user's setup, it's highlighted in blue. Other people's setup, it might be gray, it might be yellow, whatever. You put whatever color scheme you want on there. Okay. Here's another user. Okay. What this user was using was what we call stack trades. Okay. That's an actual specific amount of volume. Okay. That you can set. You can customize that, and if the total volume at that price is greater than that level, then you'll get lines drawn on the chart. So as we come up into the 78 area on crude oil here, you get a whole bunch of stack trades or trade size coming into this level. Okay. So again, every single chart that I've shown you is a user's chart. Okay, not my charts. Okay, we only had one chart from Kai. Okay. So the bottom line, what is it? And we're going to burn through what all these indicators are as fast as I can so we can get to the second part of the webinar, which is going to be basically the checklist and the training, so that when you purchase this, it's going to give you a kickstart into the members section and make things a lot easier for you. All right, so what is it? Well, we already know it's software, all right, and it was developed by an ex-Wall Street trader in conjunction with Ninjacators. So we actually have Ninjacators as support, so that's great. Footprint charts, I'm not going to get into it. Basically what it is, we're seeing the number of contracts bought on the right and the number of contracts sold on the left. Most of you already know that. I'm going to have to make the assumption, and I apologize for any newbies, I'm going to have to make the assumption that you know that. Okay, so we're seeing the number of contracts on the right, those are the number of contracts bought. Number of contracts on the left, those are the number of contracts sold at any particular price point. So we're actually seeing inside the candles or bars or range bars, by the way, NOFT will work on any time frame, any kind of chart. Okay.
Let me mention that that's actually really important, because one of the main competitors that everybody asks about that will run you about $10,000, because I was when I was going through looking to find a better solution, to find what I had at the firms, I was willing to pay anything. But the problem with probably the most expensive one out there is that you cannot, there's no adjustment opportunities. You can't adjust at different time frames. You can't use, if you like tick charts, you can't use tick charts. If you like volume charts, you can't use volume, you can't use range, you can't use anything else except what what the programmer says you can use. And there's a lot of different algorithms involved and black box involved in this other program. So, I don't believe in that. I think it should be nearly open sourced, because trading is so unique to each individual. And that's why there's so many different components to this, because I want to teach you how to really trade, not just call out trades or say this is the only way you can trade or this is the only instrument you can trade. It's more important for you to have the trust within yourself. And if you're a long-term time frame trader or tick trader or volume trader, this this is customizable for you. So that's really, really important. Okay?
Yeah, it's kind of like if you're forced to look at a specific bar type or a specific time frame, or you're limited in those respects, then you're forced to actually sit there, okay? Because you can't really slow down the action on how the bars are formed. All right, it's, as Kai mentioned, some of you, maybe you're more of a swing type of trader. Well, that's going to be difficult, if you're locked into some kind of proprietary formula or proprietary bar type, and you don't know exactly when that bar is actually going to form the next bar. So at least with the NOFT, you have the flexibility. You can use custom bar types. You can use range bars, Renko bars. I've used it on custom bar types. You can use it on tick charts. You can use it on volume charts. So again, when we say it's highly customizable, it really is. And we've shown you different users' charts to prove that. Okay. So I mean, really, what's the purpose of a footprint chart? And part of the purpose of the NOFT, is to show you the volume and price data in one point. So your eyes only need to focus in one place. All right, and allows you to see inside the price bar to provide more transparency than a traditional chart. Hello, Adele. Nice to have you here. So I mean, here's your run-of-the-mill candlestick chart. All right. And then here's a kind of regular footprint chart. What I've done with the NOFT here is just taken off all the bells and whistles. All right, and this is. Can you make sense of this? I mean, it's an honest question. If you can, well, you got a talent with numbers. All right, but that was kind of my challenge when I met Kai. All right, that was we had to figure out. What within this was actually important and what was not. And Kai helped me do that. And, the fact of the matter is now, he's given so much of his time and effort into teaching people like myself how to use this and mentoring successful traders. And then having this, it's like it really is a godsend. Yeah, I saw the question earlier, Jack. I'll get to it when I get to that one. All right, so this is a NOFT footprint instead. Okay, we've seen different setups. Okay, this is just a 3-minute chart, I believe, of the ES. Okay, and again, so now this is highlighting numbers within the chart. Okay, this is actually giving me something to pay attention to. All right, so when we come up into this 2043.50 on the ES, okay, I know that's the high of the day or previous high of the day, and this is actually a low volume area. Okay. Part of the NOFT is the volume composite, and it's actually drawn this yellow line here, which is a low volume area. And what happens when we come in there? We come in on some aggressive buying, and then aggressive sellers just take off. Okay. So I guess the big question is, well, I'm telling you I'm starting to tell you what the indicators are, and but I'll jump to the training just for a second. If we come into an area like this and I see this kind of reaction and I see this sea of red start to develop, okay, here's my entry, here's my stop. There's a 4-tick, 4-tick stop. Here's my entry, okay. If I didn't get filled on, let's call this bar number 1. If I didn't get filled on bar number 1 and I didn't get filled on bar number 2, the market eventually comes back up to my entry point right there, 2042.75, and what happens? We sell off. Okay? So in any respect, in this particular situation, what have you got? Defined entry, definitive stop, low drawdown. In this case, assuming that I actually got filled. If I actually got filled, there's 0 drawdown on this trade. Okay? And I'm going to show you a trade from Friday that I took. I've recorded it, and you'll see on that trade, 0 drawdown. I'm not going to go, well, yeah, let's go through this a little bit. Okay. How many of you are familiar with volume profile or market profile? How many of you are using that in your trading? Yeah, a lot of you. Okay, good. All right, I'm talking to the converted. Know it, not using it. I do. Okay. All right. Most of you are familiar with it. Okay, good. So, for those of you that aren't, what is it? It's a volume profile. It's a bell curve, all right? It's against the y-axis of the chart, and it represents the different areas of trading over the time period that it's been constructed against, all right? It's constructed using the volume traded at each individual price point. So against each price on the vertical axis, you will typically see a bar that represents the number of contracts that were traded at that price, or a line depending on what you want to use. Okay. So here's a NOFT volume profile example. All right. What's cool about the NOFT is that it's going to draw the high of the range and the low of the range for you automatically. It's going to draw your value area high, value area low, and your point of control. Okay. Now here's the volume composite again, this time drawn as a line chart, okay, pardon me, as a bar, as opposed to a line that we just saw on the next one, okay? And what's cool about it, actually I'm going to bring an actual chart in. We'll go through this and then I'll bring an actual chart in and we can talk about it a little bit more. So the volume composite, it's a custom NOF volume profile indicator, plots value area high, value area low, point of control, and the low volume nodes. So on this particular chart, you can see there's quite a few lines here. Those are low volume areas plotted automatically by the indicator. Okay, and you can adjust this to whatever you like. Days, minutes, hours, seconds. The profile can be drawn as bars or as a line. All right, shows the low volume areas, and you can also, I've got this color coded, but you can also set this to a heat setting. Okay, so dark areas are going to be higher volume and lighter areas are going to be lower volume. I'll show you that in a second. Okay, and there's no time component. Okay, so there's no difference between sessions. All right, so you can calculate a session template if you want to, but it's going to do that. It's going to base it on the session template. Okay, so if you're using RTH as your session template within Ninja, okay, it's only going to plot the RTH. If you're using 24/7 or instrument settings, then it's going to plot for that entire 24-hour period. All right. So I'm just going to quickly show that. So on this chart here, what's cool about this indicator, I've got it plotted simply as a yellow line on the right-hand side here. What I like about it is I can just left-click on it and I can drag it. Okay. So I can drag it to make the profile bigger or smaller. All right. Whatever I want to do. All right. Okay. Let me go to indicators here, and let's adjust this. Let's do. Oops. So you can see I can draw it as a line. If I want the heat color, I can change this to bar. Okay. Calculation base minutes. All right. So I can change it if I wanted a bar and I want a heat color. Well, let's see. Click apply. Come on, you. Whoop! It disappeared. Great. I'm kidding. Let me go back here. There it is. Okay, I would have to adjust the coloration. Let me just adjust the coloration. So it didn't disappear. There wasn't a big mess there. It actually was there. I had to go back and pull it. Let's adjust the value area color. Let's make that I don't know. Let's make it cyan. Volume color alpha. Let's make it brown. Let's try that again. on you. All right. All right, so that's probably not the best color scheme for this. I'm sorry, guys. I should really make an effort to find screen these colors that are best suited. All right, give me 1 second. Heat color, I want true, and let's make this gold. Let's make this real obscene colors. Okay, line true. There we go. All right, so I can adjust anything I want, okay? Here we are. All right, so here are all the different settings. Any indicator that's part of the NOF package is going to have the NOF moniker in front of it, okay? So basically, when you get the package, I mean, you just scroll down to the ends and you're going to find NOF and you're going to find all the things within it, okay? So for example, I can have value area color, you know, I can calculate it based on minutes or on ticks, all right? You know, if you want to do a long way back, you probably want to do it on minutes instead of ticks, otherwise it's going to take quite a while to load. All right, I can have a heat color if I want. I can have it set to days, hours, minutes, seconds. I can adjust those periods. You know, I've got it set to a 3-day profile in this chart. I can show low volume. All right. All right. So I can show if I want. Let's say I want this will show two low areas of volume. Okay, and I can adjust that to 10, and it will show 10 low areas of volume. All right. Show the heat. Okay. True. Somebody wants me to show the heat setting, so we'll do that. We'll show the heat setting, and then we'll move on to the next one. All right. And then I really want to get into the educational aspect. Not sure why it's doing that. Let me see. Value area color, bar, true, days. Not sure why the color isn't coming through properly, guys. It may be because I've got my background set to black. Let me just change that. Set my background.
You have to, Jay, you have to change the opacity. Jay, did you change the opacity?
I have to change the opacity? Opacity? Mm-hmm. Okay. All right.
Whatever.
Well, here it worked on the white chart. There's the heat, okay? There's the heat color on the white chart, okay? White background. All right. Let me change that to maybe this. All right, there we go. I'll keep it white for now. We'll get back to it. All right, so you get the idea. Anyway, so it's showing you the low volume nodes in yellow. You're having the value area in the cyan color, and then the brownish or yellow color on the outside of that. You're getting the everything outside of the value area. Okay. All right. Next. Back to the slideshow. Okay. So here's another. This is another indicator that I really like within this. It's called the dynamic volume profile. Okay. I've actually seen this indicator sold on the market. I shall wait for the screen to update there. There we are. Okay. So as you can see on your chart, I've got two volume profiles here. All right. And basically that's taking the volume profile tool, just clicking anywhere, wherever I want from whatever bar, and then just dragging to the right. Okay. And this is a cool tool because what you can do, and you can see you've got a big spike in this market here. This was the Australian dollar contract. Okay. Australian dollar futures contract. Obviously, there was probably some kind of Aussie or China news around this time. We spiked up, and okay, well, where is a likely spot? Where is a level that I might want to get involved for a trade on this? Well, by taking the tool and then drawing from this low here and just pulling to the right, to that high there, all right? This is drawn the profile, all right? And so what's come in, the price has come in exactly to where? The volume point of control, okay? Or the highest point of volume. And what happens? We get a bounce. We get a bounce up to where? Where that value area high was drawn. We go down a little bit further. We don't get much past the volume point of control. We get about to this, basically where the bulk of volume was on that up move, and we go higher. So this is a great tool if you want to figure out, where are your edges of value on a particular swing, or where's my point of control or value area high, value area low on a particular swing. It's a really awesome tool for that, okay? Exactly, almost like a variance of the fib retracement. Exactly, Rich. Excellent comment. Thank you. It's a dynamic profile tool, updates in real time. Now that's what we use the volume composite for, Nestor. Okay, so this isn't. You're going to draw this from a certain point A to point B, and it's going to give you the profile. All right, it's not going to change once you've clicked on that particular bar. All right. Or are you asking, is it going to update if you click it, and then will it update? I don't believe it will. I believe it will only update up to the point that you actually clicked it. Okay, so you'll want to wait until that bar is closed or that particular swing is actually formed to do that. And same thing here, from C to D. All right, click, pull to the right. So what's going to happen when you place it on your chart? You're going to get that little profile toggle up at the top there, okay? And that's what you use. And basically you click on it, click here, pull to the right. Click here, pull to the right. Click here, pull to the right. All right? So again, it is a very useful tool. Exactly. And similar tool is actually being sold in the marketplace for between $300 and $500 US, and you actually get this as part of your purchase of the Noft. What's also cool about this is you can actually extend the lines. Okay, so you can actually extend, if you wanted to actually have this line, this value area high extended, you can actually have that, have the value area lines, have your volume point of control lines. You can actually have those lines extended within the setting. Okay. No, I'm not. I was not saying that at all, Andreas. I was not saying that you could use that for an entry to short the top. Okay. I was pointing out the potential for a retracement. Okay. Same thing with this. If I draw from this point, this second, let's call this number 2 up here. If I draw that at that particular time, okay, if I draw from this point to this point, okay, it showed me this particular volume. Ironically, that point there was actually, there was a doji candle there, all right? So that's why I would be interested in drawing at that particular swing, because there's actually a doji there, so we got a possible reversal. And when I actually drew that, wow, interesting. Where are we? Remember, trade location, we're actually at the value area high of that particular swing. Okay, so from this high down to here and then back up again, we actually were right at the value area high. Okay. What's delta? I'm assuming most of you are familiar with delta. Am I right? Footprint delta or cumulative delta is usually calculated as the net difference between the contracts bought and sold. Okay, so within the footprint, as we mentioned earlier, contracts bought on the right, contracts sold on the left. Well, it's calculating the difference between them. Okay, it can be used can be represented as a number or as a percentage. Cumulative or net delta for the entire bar on a Noft chart is displayed as a number at the top or above. Pardon me, above the top of the bar. Okay. And it can be positive or negative. All right, so if we go back, let me exit out of this for a second. We go back, and let's change my background back to black. Now let's see, do I have them actually on this chart? All right. So So your chart should be appearing in a second here. Excuse me while I get a little water. So somebody mentioned earlier whether the top of the bar was the number at the top of the bar was the delta or not. Yes, that's right. So you're getting these numbers, whether they're positive or negative, at the top of the bar. All right, in keeping with the theme of delta, we have a delta average here, okay? And what the delta average, obviously it's an average of the delta. So you've got down here, the delta is moving up and down. It's basically just an average. It's essentially an oscillator of the delta that's being calculated on each bar. You're welcome, Chris. Yeah, it will be recorded. So another way to look at the delta is to use a histogram. So this histogram is the Noft order flow delta histogram. All right, it's a customizable delta histogram, and the way I like to use it is watching for divergences. So as we came down, this is an ES 5000 volume chart. All right, as we came down on the ES here, you can see that we actually made a higher low on the delta order histogram, okay? So that is something to keep in mind. If you like to trade divergence, if that's something that you guys are into, then this is a nice histogram. Also, what I really like about this, that kind of sets this apart, is the ability to customize a threshold. And what I've done is on this ES contract, I've set the threshold of the delta to 2000. So I'm going to get an audible alert if we go at 2000 or below, negative 2000 or below, or positive 2000 or above on the delta. And it's also going to draw a little rectangle within the histogram itself. Okay, so you get an alert if you get an extreme delta reading. So you'll have to play with that for different markets, but it is kind of a cool tool, because for the most part, when you do get those extremes in the delta, oftentimes they coincide with some type of pullback or reversal. I'm not going to, unless Kai is still here, I'm not really going to go into this. Kai, if you want to comment, you're more than welcome to. But, the big difference, and go ahead.
If you want to leave it up there for a moment, I can look at it and see. Let me just take a look. Retail versus institutions. The main difference, yes, the main difference is that, oh boy, let's see. What is the biggest difference between institutional traders and retail traders? Not the fact that we're trading other people's money. That does help. But there are other stresses that we had. It's very, very competitively. I mean, it is so competitive, it's ridiculous. But it takes, what we did is we learned the market from the market's perspective, not from an indicator's perspective. We learned that the only thing that moves the markets are orders, large orders. So go out and find out where that large order is. If you have a CEO who wants to unload some stock, go find the fund or the mutual fund manager who wants that stock. And so that's how you trade. You look for the other side of the business. You don't trade because of an indicator or something, the whole analyst thing, and those are just salesmen. Those are just salesmen just put color on something to get the retail to buy, buy the position to create liquidity. That's it. And the main difference between institutions and retail traders is really in the mindset. And we have to be accountable. So we're not only accountable to our client, but we're accountable to our risk manager. We're accountable to, because we have such large positions, we basically are the market. So we can't, so we obviously have the real value of what we're selling or buying. Because if we're more than if we have more volume than the current market, or even the market over the next couple weeks has in volume, then if we're buying, we know that the value's higher, right? So, but the problem is that we can't just buy everything at a price, or even everything in that day. And there's a balance, because we have to get paid by our volume. We're paid by volume. But we also have to give a good price back to the client, because that's our job, is to get best price. So, we're going to play poker with our specialists on the floor, our traders on the desk, the traders on that we know on the other side of the street. And so you really have to piecemeal your order so you don't show your hand. And that takes time. So you're waiting for the time and the price and the opportunity to hit the market. And you don't want to hit it too hard. But the good thing is if you can identify, you can identify where these large orders are. That's what the benefit of the membership on the floor is where when the jackets are coming down from Goldman or Morgan and what they're doing right away. There's just nothing else out there other than the NOF that I had to create myself that will show you where these positions are. And the best part about it is you can just watch for these positions, and it's sticky money. I can literally tell almost how large of a fund it is, because I've done this so long, and I've done the analysis, the bid-ask analysis, and that's what's in the NOFT. So if you can just focus on where they're strategically placing these orders, you can know that they're going to be there again to respond when the price action market comes back into their level. And I don't want to oversimplify it, if I actually did or not. I don't, sometimes I could just go on. But it can be that simple. Just follow the elephants. That's it. And take advantage of those, trading the one lots, 2 lots, 3 lots, and trading all over the place. So the 1 lots, 2 lots, 3 lots, and those guys that are all over the place, those are basically, I've identified them here on this footprint chart as just neutral. They're white numbers. They don't mean anything. Data mine the ones that mean something. And the ones that are available to move a market are those that have enough capital, have enough information, and know where the value is. So they can afford at some areas, specifically in a value area, to lay on a trade 3.5, 4.5 times the other side. And that will give you the direction. And yeah, they know where to buy and sell because they know where the other market is. They know, we knew who covered what. As far as, you don't cover the entire universe, but you know what firm and you know what trader covers the other side of the market that you're trading. So, but we're accountable, and you need to be held accountable. So this is set up to be your risk manager. So you don't have to put on 7 ticks, 8 ticks, 12 ticks risk and wait for those entire 7, 8, 12, 15 ticks to go against you to know that you're wrong. You should know within 3 to 4 ticks whether you're wrong or not. And you should take your stop. And one of the things that we have is that risk manager that will take that stop for you. you will be out and you'll be done. And you're done. If you're done for a few days in a row or a week, you get a week off. If you keep being done, you get a call into the office and a nice banker's box. Tells you to go pick up your pictures, and you get escorted down the elevator. All right, that's all I have.
Yeah, well, that's the reality of this game, all right? And you know, we'll get in now. We're going to move more into the education. I'll go through the indicators as part of it because I want to look at some real charts, some recent stuff. So I want to show you the trade one of the trades that I took on Friday. And you know, basically, we talked about this earlier in the webinar. You know, the main engine behind this whole NOF thing is the NOF order flow sequence tracker. Okay. And what it does, it gives you the ability to see trade imbalance. All these red numbers, okay, all the red numbers and blue numbers or red and green numbers that we've been looking at today, those are trade imbalances, okay? The imbalances that are on this particular chart are highlighted in blue and bolded, and you can adjust the font size to whatever you want on those particular numbers, all right? And on the sell side, they're in red, okay? So what it is, the imbalance, what it boils down to is we're looking for a multiple of the other side of the trade. So for example here, I've got 770, and I'm actually comparing that to 20. And I'm saying I believe my setting is 300%, okay? So let's just say my setting is 300% to find an imbalance. That means one side of the market has to have 300% more contracts or greater than the other side of the market. So in this example, you always look diagonal at these charts, okay? It's a funny thing to maybe get your head around at first, but you know, I'm used to it, and most people who are familiar with the footprint are by now as well. So if I've got 770 on this side, I'm looking up and to the right, okay? So obviously 770 is more than 300% of 20. Okay, so in other words, if you went 20 times 3, that's only 60, right? Okay, 20 times 3 is 60, right? All right, 20 times 3 is 60, all right? So obviously any number of contracts above 60, that is going to turn the other side red. So there's what we call a sell imbalance. And here's and the other side of the equation, okay? Right here, down here on this one. This one is a blue highlighted number. It says 1799 if you guys can't see it. And I'm looking down on the other side at 471. Okay? Yeah, it's got to be three times or more, okay? If I've got it set to 300, okay? So obviously 1799 contracts is more than 3 times greater. 471 contracts, boom. This number gets highlighted in blue, okay? So it's easy for us to see who's in control. In this particular chart, they're highlighted in red, highlighted in blue, okay? And as Kai was mentioning earlier, you can predict with some degree of accuracy where the market is going to break out. We're obviously in a consolidation up here in the left-hand corner, are we not? In this entire left-hand corner, do you see blue? Never mind the blue highlighted cells. Those are the volume point of control of each bar, okay? Or COT, as some people like to call it, all right? I'm talking about, do you see any numbers that are actually blue, bolded, highlighted? You don't. You see one right there. Everything else is a sea of red, 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 sell-off, breakdown, okay? Back into consolidation. What are we seeing again? It's like a rerun, okay? Red, 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 one blue here, red, red, one blue here, red, 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 sell-off, okay? So it's easy to see what the NOF imbalance trade imbalance, where the market was going to go. All right, it was an early warning sign that the market was going to head south. Okay, so you have the ability to change the color of the imbalances to whatever you choose, adjust the font size, what have you. Okay, market continued to sell off, no surprise. Second indicator in the order flow sequence tracker, okay, as part of that main engine, the order flow sequence tracker is what we call auction. Okay, auction is automatically going to place horizontal lines on your chart at prices where there is what we consider unfinished business. Okay, this is basically where the auction was not complete. How do we look at a complete auction? Well, a complete auction will end with a 0 and a number up at the top, and a number and a 0 at the bottom. Okay, so an incomplete auction at the top is going to have two numbers. One of them is not going to be a 0, and same thing on the bottom. One of them is not going to be a 0. Okay, so the auction can be unfinished at the top or at the bottom or on both. Okay, so what's the point of having this on your chart? Well, there are areas or prices that the market is usually going to return to at some point in the future. I also like to use them as great places to hide my stop behind. Okay, so you can see on this screenshot of the TF, many auction lines were generated, and you could have caught the bulk of the move if you were simply trailing your stop behind the auction lines. Okay, as always with the NOF, all the settings are customizable. Okay, moving forward quickly here. Come on, update. I said quickly. All right. Another part of the order flow sequence tracker, that core engine, is what we call the block trades. You've heard us talk a little bit about that today. What block trades are minimum order size set by the user. Okay. The block trades will draw a horizontal line on the chart when an order of minimum size or greater is filled. Okay. So we have a block trade at this price level, a block trade at this price level, a block trade at this price level. These are all sell block trades, okay, highlighted in red. Now, this is not trying to reconstruct the tape, okay? If an order, let's say I have this set to 25 contracts, and somebody decided to sell 5 lots of 5 contracts, okay? It's not going to detect that. What we want to see is the real aggressive person who's going to come in, the aggressive trader, and is actually going to hit the market with the 25 contracts or greater. Okay? That's what the block trades are. Okay? So we pop up here on gold, and then immediately we get block trades, sell imbalance, sell imbalance, sell imbalance, block trade, sell imbalance, sell imbalances, and we head down. Make sense? Yeah, Rich, we actually have a solution to that, okay? Rich was asking if there are multiple block trades at a certain price, does the line width get thicker or stronger? No, we don't, but we do have a solution if there is stacked block trades. So we'll get into that in a minute. So again, here's block trades, this time on the buy side, all right? As we moved up in gold, very easy to see that, which side of the market that you should be on, okay? So you can adjust this. You could have it just to the block sell side, okay? Or to the block sell and the buy side, and you can just have it set to the buy side, okay? So that's block trades. So this actually kind of goes into what Rich was asking about, all right? This is what we call the NOF I Ghost block. This is the second main part of the engine, okay? And what this does is it's going to draw zones on the chart automatically, okay, horizontally. These zones are drawn based on information contained in the footprint, the actual number of contracts bought or sold. The I Ghost block indicator has 2 functions. The first is block zones. The second is stacked imbalance, all right? Block zones will be drawn when a group of orders equal to or greater than a certain size are both filled and stacked on one another. So in that example, I said 25, okay? To get a zone drawn, you're going to have 25, 25, 25. And you can decide how many sequential orders or sequential block trades that you want to actually constitute a block zone. So I could have this to just 2, okay? So I could just be counting these 2 and get rid of that, okay? Or I could have it set to, I could set it to 5, okay? I want 5 block trades stacked in a row for me to get an actual block trade zone drawn, okay? And the same thing goes with the stacked imbalances. Stacked imbalances are going to be, or imbalance zones are going to be drawn when there's aggressive buyers or sellers who are stacked one on top of another, okay? And what these are, really, they are great places to look to buy into or sell into when the market retests them, all right? So in this example, this is the YM, the Dow on a 3-minute chart. Near the end of the day, we popped up. We got a buy imbalance zone, or pardon me, a buy block zone drawn. We come back in, test it. Going into the Asian session, we come up a little bit, come back, test it again. Boom. We go up. And, in keeping with mental flexibility here, another zone gets drawn when we form this little top here. And what's funny about that is we come out, we come back and test it twice, and then we sell off, okay? So these are actual support and resistance zones drawn using the volume, using what's actually coming through the tape, okay? Actual orders that are filled, okay?
Even on a candlestick chart or any other chart you want to use.
Yeah.
And this goes back.
This
goes back to the discussion I had about the. Jay was just saying, I want to see 3 levels of 25 or more, right? That just goes back to institutions can't sell all 75 contracts or all 100 contracts. They have to piece it out, and they'll do that over price and over time, price, opportunity. And that becomes support and resistance levels. So one thing you'll see is when that market goes up, auctions up, and then traps those large buyers up there, they're only doing that because of the previous supply that was up in that area, and then it takes it back up, and there you go. There's a little double top opportunity that flushes out the retail traders, and then that's the short. Right up into that, there you go. Right up into that, there you go. You anticipate price action. If price action trades around that zone, you're long. And you're looking for a retracement to get long. There you go. Right? But if price action does not, you're looking to take advantage of those, buying the double tops. That's why you get the very quick trade. And it automatically sets up where your risk is if you're short, that zone just beneath. Remember, those are buyers. So you'd be looking at the tape, watching to see if those buyers are coming in. And those buyers are the ones that absorb those sellers. So they basically slow down the selling, then they pause it and pivot it, then they can take it higher. And you can see that happening in real time. Go ahead, Jay.
Going with what Kai was saying earlier about about there always being a trap being set in the market. Okay, here's a 60-minute chart of the crude. Okay, just going to show you that it's going to work on longer time frames as well, not just 3-minute charts or 987 ticks or whatever. Here's a 60-minute chart, okay, of crude oil, and these block zones. The heavy buy orders getting trapped near the highs. We get this rejection candle, and we got these block buyers up here. The poor guys, man. Those poor guys and gals are stuck up there. And what happens? Look out below. Now, just to go into a couple details about this, you can adjust, as we mentioned, how much of a sequence you want, 2, 3, 5, 10 10 block orders stacked one upon another sequentially, and you can adjust the timeout period. Okay, so if you want this to only last for a certain number of bars, or a day or whatever, you can adjust the actual time period. Okay, so if you feel that after after 8 hours you feel that this is not relevant to you, okay, no problem. Well, you can adjust it so that after 8 hours those zones would disappear. So same thing with the stacked imbalance. Okay, I go stacked imbalance. This is another chart of the crude. We pop through, we make an imbalanced zone. Okay, what happens? We try to come above it. We can never get a close above that top zone there. We sell off. Okay, so that's your entry potential number 1. We come back up to that zone. This time all we do is test it. Nothing really happens. There's entry potential number 2. Big sell-off. As we come down, we draw one zone here.
Well, there is something that happens.
Yes.
Look at each one of those trades. Look at the double tops. Now they trap the double toppers on each one because they don't have this information. They don't have that. They're looking to buy into institutional sellers. How dumb is that? I'm going to sell in front of people that have all the information in the world and all the size and the capital in the world? Or excuse me, I'm going to buy in front of large sellers? That's why 90% of them fail. They don't have the right information.
And what really just blows me away about the NOFT is that it's presented in such a visual fashion. Okay, you got enough to worry about when you're trading. Let's face it, it's a high stress game. Okay, if there's any tool that can lower your stress level and make it very visual, simple to use, that's a tool that I want. Okay, and the NOFT does that. So we got entry potential number 1, entry potential number 2. We go down, we make another zone in the middle of that bar, and then another zone down here in that bar, and we only get one close below that bottom zone. Okay, and then we immediately get a doji. Where does the market come back up to? Up to this zone, entry potential number 3. Sells off, back down to the zone that they couldn't break. All right. Yeah. All right.
Yeah.
Now you got, this is entry potential.
After they flush out the.
After they what?
After they flushed out the sellers.
Yeah, exactly.
Notice that after they flush out the sellers, that's when they take it higher.
Yeah. So we come down, entry potential number 4. That would be an aggressive trade. I mean, you're going against the trend here. But hey, if they can't get below that sell zone, think opposite. Well, then if not down, must be up. So there's your potential trade number there. You go back up into this zone. They still can't get a close above this zone. Entry potential number 5. Back down to this zone, the bottom zone. We finally break through it. We break through it. We get another zone drawn here. Entry potential number 6. So you got 6 possible trade entries on this chart, all with low drawdown, and I'm going to show you in a couple minutes, exactly how I do it with an actual live example from yesterday. I told you guys I record a lot of my trades. I try to record every single one of them, but sometimes I forget. But I'll show you a trade from yesterday that I took on crude, and it was actually a bad trade because I stopped myself out too early. But nevertheless, it still got me 40 ticks. Good question, Zohar. What is the difference between this and the program shows the depth of market buyers and sellers that you have? We're not looking at depth of market. We're actually looking at the number of contracts actually bought and sold, Zohar. Okay, we're not looking at possibly fictitious orders or spoofing, okay, that can be done within the DOM. I think that's what you're talking about. All right, the Delta Tracker. All right, I'll quickly go through this, and then I want to get to my video. Another area that I have trouble with is when price is trading in a channel. Looks like it helps identify future institutional direction. Exactly, Rich. Can you touch on how you use the reverse signal and what are the settings you use? I haven't forgot about you, Jack. Kai and I are both going to talk about the reversal signal in a minute, and since it's on this chart, we'll talk about it once I'm done with the tracker. All right. So I asked a question here about the NOF TS time and sales delta tracker. It's this thermometer on the left-hand side. Okay, green on the top, red on the bottom. Ever wonder when to get out of a trade or take some profits off the table? The delta tracker can help you. Okay, hit the reset button after entering a trade. The delta tracker is going to monitor the time and sales to give you a clear understanding of aggressive buying or selling after you've entered the market. Okay, you can also set it to have an audible block trade alert. So when a block trade, let's say you don't want these, see how I've got these green block buyers on this gold chart? Okay, if I don't like lines on my chart, if I'm not a visual person, if I'm a more auditory kind of person, I can actually set the delta tracker to alert me to when the block trade comes through the tape. Okay, so I don't even have to have the lines. I can have an audible alert for the block trades. Pretty cool, huh? All right, so again, what it's detecting is market orders only. Okay, is that correct, Kai? I believe it's on. Yeah, I'm 95, 98% sure it's only detecting the market orders that are coming through coming through the tape. Okay. So a good way to trail your stop is to have that once you've entered the trade. See if you're actually on the right side of the market. What I like to use it as is if we come into a level. Let's say, well, I have a purple line on the chart. I don't know what that was for, but I have a purple line on the chart. So we come into that purple line area. Sometimes I'll actually hit the reset button on the delta tracker and then see what's happening. Am I getting more red? Am I getting more green? It gives me a kind of an indication of what might be happening at that particular price level. All right. The reversal signal is this. This is for Jack, okay, and anybody who was wondering, the NOF reverse signal, okay, it is kind of an algorithmic indicator, all right? So theoretically, you could program this to actually take trades for you, all right? But it's not at this. It's not it's not programmed to do that at this time, okay? It has different settings, okay, and basically it has single, combined, and block signal incorporated into it. Okay, these are all these red and green colored cells down at the bottom of this chart. All right, and you can adjust the volume clusters and delta within the actual signal. Okay, I have not, to be honest, I have not played with this a lot. Okay, but what I have noticed is that it is a great indicator if you come into an area, whether it's pivots, whether it's a Fibonacci level, whatever you're using, an area of the profile. If you come into a level and then you see this go off, very powerful signal, all right? So one of the things that it can do, because there's an audible alert with it, is it can actually allow you to watch more markets, all right? So that's one of the things that I'm working on to incorporate into my own trading, is using this tool to give me a kind of heads up, just like the tracker will do with the block trades. When you use this tool to give me a heads up that, hey, I might actually have a trade here. If I'm just watching, one or two markets, I could possibly watch 3 or 4 that way. So the idea is, hopefully, if it can mean the difference between you spending, 2 hours and 3 hours versus 4 hours and 5 to get whatever your profit target is for the day, well then I'm all for it. Okay, and it can be automated. All right, but it's not going to be able to do that at this time. Let's see. Why is the tracker filter red when the market is going up? This is you can actually see the number in there. You got 4605 versus 3921. Okay. At the bottom. Sorry, Dan. Just wait. Yeah, well, what you did get a reaction up here, Dan. you got a reaction up here. There was a couple things going on. There was a sequential decline here. There was the volume point of control within a certain percentage of the bar. Those are part of the calculations of this indicator. And so, it did give you that fact that it came up here, and then, we actually closed somewhere in here, right? Okay. All right. Let me I want to kind of skip to where let's go watch the video. Okay. Let's just watch the video. Okay. And I will show you, let's go, where was that yesterday? That was around here. Is it here? I think it was here. Yes, it was. Here we are. All right. I want to show you the chart because the video is not as clear. All right. So here's the training. All right. Here's the training. We've gone way over time. I thank you guys for sticking. We got more than 90% of you still with us. That's awesome. And I will make it worth your while. I'll push this another, I don't know, 15 or 20 minutes. Do you guys want me to continue? If you will, I'm going to show you the video and I'm going to show you exactly why I did what I did. Okay? And then I'm going to give you the checklist. All right? Free drinks on you. Well, by the time we're done this webinar, it'll be too late. It's already 12, just after 12:15 midnight here in Hong Kong. But hey, it's like New York. The place never sleeps. So, all right, I will continue. It looks like everybody is saying yes. You guys rock. Thank you, guys. Not one of my smoothest webinars, but the information I think is worth it. All right, let me. So I'm showing you a video of the same chart area that I just showed you. Okay. So I guess actually. So I just want to show you first the entry, okay? So the entry is up here at 77.30, and I will just send this video out. It's very short because it actually takes my profit target in very early on in the video. All right, so my entry yesterday on crude oil, 77.73, okay? Now let's go into why, okay? I want you to know why. And you're going to see how this combines with the checklist, okay? So here's the same chart, okay? I've just adjusted the buy imbalances to lime green to make them a little bit more visible. But here's the same chart at the same time, okay? So again, where was my entry? Right here. 77.73. How did I get into the market at 77.73? I had a resting limit order at 77.73. The question is why? Why did I have a resting order at that level? Okay. We made that big move up in crude yesterday after China announced that it was crystal ball, exactly, Rich. After China announced that they were cutting rates. For the first time, I believe, in a year or so. Okay, they were cutting lending rates, all right, and giving some banks some more flexibility in terms of their lending to counteract some of the slowdown that's happening within their economy. So we get that huge shoot up, and as we're coming up here, we came into a level that I had already had placed on my chart. So. And that was actually based off of the, I got in because of the red line. You're right, Skip. I'll actually remove this, and I'll go to an actual structure chart, like a bar chart, and I'll show you why. On this chart, here's just a bar chart, okay? I'm just waiting for it to update. Please be patient. Is it updating for you? Can you guys see just the regular bar chart? Okay. Okay. All right, good. Okay, so this bar chart is crude oil on a 15-minute time frame. Okay, you guys can all see the candlestick chart now, just this regular bar chart. Yes, 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 yes. Okay, all right. And one of the indicators that's actually on the chart is the NOFT supply and demand indicator. And some of you actually might have that supply and demand indicator from Ninjacators. Okay, so as we came up into this area, I was actually interested in potentially doing some business. Why? This is a sell area generated by the NOFT supply and demand indicator. Okay, so that's why I'm interested in potentially taking the trade. So it doesn't matter, you know, this could have been a Fibonacci level, it could have been a pivot point, it could have been a Gann line, Elliott wave potential target, you know, whatever it is, okay, whatever you're using to trade. It could have been whatever that is, okay? In my case, it was this supply and demand indicator, all right? So take that off the chart. So as we come into that level, what am I seeing? Just wait for it to update again. I'm losing my voice here. So as we come into that level, what am I seeing? This is what I'm seeing on the NOFT. I'm seeing red lines showing up, okay? And I'll try and remove some of the others, okay? I'll get everything off the chart except the block trades, all right? I'm seeing red block sellers coming in. Here, 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 okay? All right? And what do I see? I see we pop this little previous high back here, okay? That previous high back there, we popped that by a few ticks, and we got 150 on the aggressive buy, okay? We have a buy imbalance highlighted in lime green here of 150 contracts, all right? But we had block sellers sneaking in as we're making this higher high, okay? All right? And we started to see some sell imbalances as we were coming in to make this final high, okay? And then we make the turn here. In other words, we kind of form that pivot top there. And then on this candle, if we call this candle number 1, we get a sell imbalance, and we get another sell imbalance. We get another sell imbalance. And what happens? So I know now we've got below one of the block sellers, which is at 77.74. Okay, the block seller up at near the top is at 77.74. We have others, but there's one block trader at 77.74. So here's part of the checklist: block trades. Okay, is there a block trade in my favor? Okay. Other part of the checklist: imbalance. Do I have imbalance in my favor? Yes, I do. I've started to see aggressive sellers coming in the market. 48, 48, 47, 97. Okay. 34, 5. I put my order in, I believe, on this candle here. Okay. We'll call that candle number 2. All right. And I put my order where? Just ahead of the block trade. I put it in at 77.73. The block trade is at 77.74. We already mentioned that. My order is in at 77.73. Okay? Why? Where should this market not go now? Okay? Based on what I was seeing, the market should not go above that block seller and that last aggressive buyer or seller, that 48 there. Okay? Does that make sense to everyone? Yes, makes sense to everyone? And why? So furthermore, why should it not go above 77.75 where that 48 is? Because when I looked back, have you guys heard the term look left to be right? When I looked back, we had a 37 at that same price level, 37 aggressive seller, a 38 aggressive seller at that same price level, and then that 48. All right? Yeah, exactly. I know if we break, we got that first block seller, that's where I was hiding my stops behind, okay? My stop is actually 77.76, okay? It was either 77.76 or 77.77. So I had literally a 3 or 4 tick stop on this trade, all right? So sell imbalance in my favor, block sells in my favor, okay? I know if we can make it below the 2 block sellers that are at 77.76, the red line there. Whoops. Come on, you. What happened? Sorry. Neither, Jack. 77.65 and 77.63 are where additional block sellers are, correct? Do you see those red block sellers there? The red lines? Do you guys see that? Okay, you guys see it. All right, excellent. So I know this is a trade that can run heavily in my favor if we break those block sellers, okay? If we break below those block sellers. So that's why I had my order in at 77.73. I was hiding behind the block seller, okay? At 77.74, I knew I only needed a 3-4 tick stop to do that. The market takes my order. What do? We break down, and that was actually the high zone of the day. I only got, this was real, the trade was taken just before the RTH, Adele. It was, looks like I would have got filled on the 8 o'clock bar on this chart. So about an hour before the crude open, okay? So this will work on, hours that are outside of regular trading hours, okay? So let's go to the checklist. I would go through more examples, but we're like super overtime. I'll get to the questions, Jack. I'll just want to finish up on the checklist, okay? And I've given you real examples of how to use this today, all right? And how the users are using it, more importantly, all right? So basically, it comes down to a few core things. You've got your trading education, whatever that is, okay? And the point is, well, how do you incorporate the Ninja Order Flow Toolkit into that trade plan, okay? Whatever education you've had, great. Bring it along with you. Use what's useful. Discard what's not. Doesn't matter whatever method or style, time frame, it's up to you. It's unique to every trader, all right? Doesn't matter. Volume profile, Fibonacci pivots, Elliott waves, trend lines, whatever it is, cycles, price action, okay? Support, resistance, whatever, all right? Here's a basic checklist, okay? This is basically all I used for that trade, did I not? Okay? What did I use for that trade? Imbalance. My stop. Where could I hide my stop and how much was it? 6 to 10 ticks max. Check. Okay? Imbalance. Aggressive buyers or sellers. Check. Block trades. Check. And then the other things that I would look for along those lines are the auction lines to trail my stop. The combination between the auction lines and the block trades to trail my stop behind. And also look for the zones. Okay? That's it. That's all I took for that trade. Okay, that's all it was. 2 or 3 things for that trade. That is simple. You know, there's lots of education and there's advanced techniques and stuff that I could talk about until we're blue in the face. But you know, the bottom line is you don't need that. It doesn't need to be complicated, folks. You need indicators that work. You need indicators that are based on what? Volume. Based on the actual contracts bought and sold. All right? So I've shown you a simple way to incorporate the NOFT into your trading, and I'm just going to show the rest of the video where I got out. 1 second here. So it's playing. I'm just going to fast forward it. So I got 0 drawdown in this trade, and I took 40 ticks. Okay. All right. Somebody was asking some questions here. I'll go back about data jack. You want to go with Kinetic or IQ feed. All right. If it's within your business budget, use IQ feed. Okay. It's probably the best data feed out there, and then just NinjaTrader is smart enough to know that if you log into your data feed first and then log into your broker's platform, it knows that the first is your data and the other is your broker platform. Okay, so you can use something like IQ feed or Kinetic as your data provider, and then use Rhythmic or CQG, whatever you want to use. Okay, and you can see I trail my stop. I trail my stop here just ahead of this sell imbalance, and then to be honest, it was Friday. It's getting later for me on Friday, so I took my profits and I'm done for the week. So there you go, 40 odd ticks there. Yeah, 40 ticks, boom, out. So I was out somewhere around that 77.34 area. Okay. Kai, are you? I hear you.
Yeah, I'm here. What's up?
Then no, just that I thought you were wanting to add something. I didn't.
Sure, I can add something.
Yeah.
It's great to have a strategy. It's great to have the education to finally make sense of it. But again, number one thing that Jay is stressing is in that strategy, and the difference between institutional versus retail is there's risk management first. So it's where's the risk first. Then a lot of people have a problem with knowing where to hide their trails. Jay is showing you 3 different ways to run your trails behind, right? So that you can stay with the trade longer. And it's not based on a guess. It's not based on, I don't know, what else can you run trails on? I mean, a number of ticks behind. It's staying behind larger orders, larger block trades, larger, unfinished business. The idea is if you're in a short and large sellers keep selling, well, hide 1 tick or 2 ticks behind them. Because if the market comes back up and takes them out, then you have no reason to stay in that trade. So this takes that guesswork out of the equation. And it's also dynamic. If you don't make the first trade, one of the things that most retail traders do is they chase. They go, I'm going to miss this, I got to get in. And they get in, and then they get flushed out, and then it goes. The best thing to do is see your level that you want to trade. Identify your risk. If you don't take that trade based upon that risk, don't chase it. Wait for the next opportunity. This is so dynamic that if it's going to go short, it's going to give you a couple times to get in, 2, 3 times to get in. And each one of those opportunities there's basically a setup. It's really a setup. And there's a specific way to read these numbers. Not an indicator, not a candlestick pattern. It's actual numbers. All right?
Awesome. Thanks. Zohar is asking, I wanted to ask what is the difference between the iGhost indicator and the supply and demand indicator. The I ghost is taken from the contracts, the volume Zohar, the actual contracts bought and sold. That's how it's plotting the zones on the chart. Whereas the zones that are plotted by the NOFT supply and demand indicator, I believe that is taken from the price action and retracement levels. Is that right, Kai? I think that's what it's doing. Anyway, it's not
on the supply demand.
Yeah, it's not taken from the tape, right? It's taken from price.
No, it's not taken from the tape. It's your traditional supply demand. So how I use it is it's taken basically from pivots and rolling fibs. So how I use it is I'll have it on, and say I have a 30-minute bar chart. I'll have the supply demand on, say, a 240-minute. So it'll be showing me the supply demand from 240 minutes on a 30-minute chart. That's how I use it.
Excellent. Yeah, for free data feeds, Jack, yeah, I mean, whatever you can get. Yeah, Rhythmic is a pretty good, if you got a demo account that's using Rhythmic, that's pretty good. Yeah, CQG, they're both pretty good. Either or. Okay, I've used them both for demo accounts, but for live trading, you don't want to have you want to have the best that you can possibly get, which is going to be DTN IQ feed or Kinetic. Okay. But if you're just starting out or you're just starting to use the NOF, sure, use CQG or use Rhythmic or whatever your broker is providing you in terms of a data feed. What broker and data are using? I'm using my broker's AMP. Okay. And I have another one as well, but I'm using Kinetic data feed myself. Okay, how many ticks did that trade go? 40. We already talked about that. So a zero drawdown trade with a 40 tick target, not bad. Okay. To be honest, David, on that particular trade, there's a couple things going on. Okay, and I have to kind of get over them. Everybody's got their psychological struggles with trading. Kai has his own. I have my own. Everybody does. Okay, it doesn't matter what level you're at. You're always kind of at war with that inner beast. Okay, and the inner beast is it can be lack of confidence in the methodology. It can be impatience, as Kai mentioned. It can be chasing. That desire not to miss out. Okay. Whatever it is. Basically, for me, I hate trading on Fridays. Okay, if I can make most of my money throughout the week and not trade Friday at all, I'm happy with that. Okay, nothing worse than making all money all week and then you start giving back profits on Friday. So on Friday, I tend to be a little bit panicky on Fridays. There wasn't really a logical reason to get out of that trade other than the fact that it went above this. Where was it? It's not on the chart now. I believe there was a block. There was anyway, in the video I believe there was a block there, and I kind of just put my stop behind that and thought, okay, well, and that's the thing. That's the lesson that you can learn from my mistake, is it only went one tick above that block, all right? So it went to 77.42, I guess, or exactly to that. Where is it? It's 38 right here. Okay, I think that's where it was. All right. So I put my stop right at that 38, and if I'd put my stop just behind it, okay, I would have still been in that trade. All right. So the bottom line is, yeah, I made an error, but hey, I got 40 ticks with zero drawdown. What do you want, man? Right? So I hope that answers that question. I started using Ringo bricks not long ago, but this is a very missing part of the puzzle for sure. Yeah, I mean, once you see it, Zoltan, it's just like it really is seeing the light, kind of like the slide that I put at the beginning of the webinar, the light at the end of the tunnel. Once you've seen it, you can't go back. Okay, you can't go back just to price-based charts. Okay. So in short trail, the 1 to 2 buy stop above the large buy orders, Mitchell. Yeah, either clusters of the sell imbalances, or block sells, or the auctions. Okay, the unfinished business. Let's see, where's the unfinished business auction? Here we go. See the gold, the yellow lines are drawn from the profile. Okay, but these gold lines. Actually, I'm just going to take the profile off the chart for a minute. Okay, volume composite, remove. Just wait 1 minute here. Come on, come on. All right. This is the best place, at least from my point of view, is either the block trades or the auction. Okay, those are the two places I love to trail my stop behind. Look at this auction here. Now imagine if I had kept that trade just that one extra tick instead of panicking. All right, if I'd given it that one extra tick just behind that aggressive seller, that 38 highlighted in red right there. Okay, the next place I could have immediately trailed my stop to would have been that actual level. Okay, and then the market goes down, and assuming that I trailed it behind that. Okay, yeah, I'm stopped out there, but I've got an extra 5 to 10 ticks extra. If I continue to allow it to give it more room, then my next stop is here. And actually, Apurba, if he's still here, Apurba's seen a lot of my videos, and he's seen, man, you leave your stop far away for a long time. Well, again, it was Friday, and I just don't like playing around on Friday. I've got to maybe get over that, considering the context of the news with China reducing the interest rates. I should have known that it was going to be a bigger mover day. But there you go. I mean, what more do you want? That was a perfect entry. Okay, you can't get much better than that. 0 drawdown, 40 ticks. Okay, I'll take it. Have to learn a new level of patience. Well, the great thing about this, Rich, is that it's either there or it's not. Okay, it's either a level that you want to do business at, and then you're seeing that checklist. And I'll go back to it. You're either seeing imbalance or you're not. You're either seeing an area where you can have a 6 to 10-6 stop, okay, max, or you're not. You're either seeing block trades come in or you're not. You're either seeing auction lines that you could potentially hide your stop behind or you're not, okay? You're at or near a stacked imbalance zone, or you're at a stacked block trade zone, okay, or you're not, okay? It's very, I deliberately did this checklist just to show you that even if you don't have all the things in this checklist, but even a few of them, that you can get an edge, and you can do it with very low risk. Okay. The sequencing of the numbers is what I need to learn to qualify key levels from my point and figure charts on market delta. Yeah, I guess it's not so much the sequencing, Nestor. It's figuring out which numbers are important, and that's the key with the NOFT. With the block trades, the zones, the imbalances, you know which numbers are important. Okay. Jack, just to plot. Don't know what. Yeah, just to plot. Okay, I answered that. Why are larger white numbers not block where the red lines are? What it means, Mitchell, if there's a block trade, so let me scroll back here. Put the block trades back on the chart. I'm looking for block sells, okay? So unless they are 25, unless they're 25 contracts or more, okay? On the crude, I believe I have it set to 24, 25. The numbers are going to stay white, okay? Okay. So they're going to stay white unless there's an actual block trade in there, or they're an actual imbalance. So here, let me scope this out here. look at this right. Let me get rid of the arrow lines. I need a new arrow. Where's the arrow lines? Okay, arrow line gone. All right, there is one. For example, here. Here's a situation where you had a aggressive seller, this 6 here. Okay, it's actually red within the line of the block cell. That's the horizontal line of the block cell that's drawn on the chart. And there was actually an aggressive seller, an imbalance there. Why? Because 6 is greater than 3 times 0, right? Or pardon me, 6 is more than 3 times 0, okay? All right. Let's see. Chris is asking, I'm not sure if you're still here, Kai. She's asking, is there any chance to get the link to the essential read you gave us on Monday night? I lost it somehow, sorry. I'm not sure, Chris, you can email him or email me. My email's already in there. Kai's is just the same, KAY@ninjaorderflowtrader.com. Mine is JAY@ninjaorderflowtrader.com. Next question. I promised you guys I would get to education and questions, didn't I? I'm late, but hey, we're there. How many ticks must be behind the high volume prints? Yeah, I'll usually give it just an extra tick. So if I'm hiding behind an auction line, or I'm hiding behind a block trade, or I'm hiding behind an aggressive buyer or seller, that's where I'm trailing my stop, or that's where I'm basing my stop off of, I'll give it just one extra tick. Okay? So that's it. I'm not going to give it any more. What is your opinion about mirrors, futures, and continuum data? I don't have it. I've used continuum before NetJam, and it seems okay. But again, in terms of what is best for a trader out there in the retail space, if you're actually going to trade real money, spend the money to get IQ feed or kinetic. Okay. This looks like it works on tick-minute range. How well does it work on a daily chart if you were to trade stocks? You just have to make adjustments on the settings, Rich. Kai can probably speak more to the stocks because he's trading them. He's trading stocks and ETFs. But it's the same principle. You're still going to see, hopefully you're going to see buyers trapped at the top to take your shorts and sellers trapped at the bottom to take your longs. And you're going to see all the same things, block trades. You just may have to adjust the settings, that's all. And I'm going to go into a little bit just quickly about the members section and the offer, and then we're done. With good targets, no need to struggle, no need to strangle the trade. Yeah, David, that trade yesterday, I just didn't believe that it would actually retrace 100% down to where it took off of from that news out of China. That's all. Discipline. Yes, Sally. Cool stuff. Great webinar. Thank you, David. I know you hit something secretive about retail traders. I feel like one time I made to the monitors a very large broker pit room years ago. Revisit again. Oh, okay. Cool. Excellent, Zoltan. But just as important is how the market is approaching a key level. Yeah, but I mean, that's, even on this chart, I'll beat this example to death simply because it's the last chart example I'm going to show. So as we were coming into that high at 77.84, again, what are we doing as we're coming into that level? Block sellers start showing up. Aggressive sellers start showing up in red. Block seller lines start showing up in red. Aggressive sellers. And then we get a big aggressive buyer, 150, and that 150 cannot push the market higher? Huh? Huh? Scooby-Doo? So yeah, you're absolutely right. How it's approaching a key level. Okay, so white are cumulative total, not block. Yes, correct, Mitchell. Thanks, Jay. Will do. Do you give out templates? Excellent question, Trader M. We are going into that right now. This is great, Jay. Thank you for all your time and teachings. You're very welcome, Chris. What kept you from entering short on the first high that had a sequential decline? You're Lisa B. Are you from Australia? Is that the Lisa I know? No? Okay, never mind. Works with FX? Yes, it does, Zoltan. It works in a different way, but the charts will still look the same. You just won't be able to track block trades. You'll have to use something what we call trade size. Okay, but you'll still be able to see the aggressive buyers and aggressive sellers. Okay, and everything else. Texas, don't mess with Texas. This is a beautiful setup. Excellent, Adele. Do the hedge fund guys use this info? Well, they must be. They're moving the market. We seem to be able to interpret they're moving the market. Okay. Thanks, Jay and Kai. Love the thinking. You're very welcome, Rich. Jay, can you tell where is the close or the open of the candle? Yes, you can. These are actually candlesticks, and all they are, they're just showing you the numbers. That's all. They're showing you the numbers inside. So what do we got? We got the wick. Here's the wick. This top candle here. There's the wick. There's the tail. There's the body. Okay. That's it. So you can actually adjust the wick color now too. That's something you weren't able to adjust in the past. It was just a kind of off-white or gray color. Now you can actually adjust the color of the wick too. So the body I've got my bodies of my candles in green, and my for the up candles and for the down candles I've got them in kind of that salmon color. Did the delta average turning red give you a heads up? Yeah, it actually kind of does, doesn't it? I didn't actually notice that. So there you go. Sally, you know how to use it already. Sally is pointing out that down here the delta order flow histogram was actually, or the delta average, pardon me, had turned to red by the close of that candle up at the top. So you got the average in red while the delta on top of the bar is still green. There's a little bit of a divergence there. So how do we get this software? Good question, Suddy. We've provided so much information and examples today. Let's get to the meat of the matter. Yes, I am trying to sell you software. Let's get to it. Oh my gosh. I'm hitting end on my keyboard. Okay? Which takes me to the end of the slideshow. All right? We value the NOFT at least 5,700. The price is $34.97. Okay? Just buy it exactly, Aperba. This is not free. What? I think it's a steal. I seriously think it's a steal at $34.97. Okay. What are you going to get with that $34.97? I've put the order page and my information, everything that you see on the screen here, the order page, as well as my email and Skype. If you just have anything that you need to clarify before going ahead and ordering, you can contact me through Skype, jay.noft, or email me, jay@ninjaorderflowtrader.com. All right. The specific link to order from yours truly is ninjaorderflowtrader.com/go/ninjaorderflowtrader-toolkit J at the end. Okay. / So it's better just to click on it from within your go-to. Okay. All right. So this is full payment purchase of the NOFT. You have a lifetime license with that, and you can put it on more than one computer, but you cannot run them concurrently. Okay, so you can't run the NOFT on one computer and on another computer at the same time, because that would require more than one license. However, if we do place the NOFT on another platform, which I believe is in the works, your license will be good for the other platform, It's going to be a professional grade platform, okay? So it will be good for the other platform. Again, you just won't be able to run them concurrently without getting an additional license, okay? This actually is optimized for NinjaTrader 8, so when NinjaTrader 8 comes out, it will work perfectly, okay? Not eSignal, David. I think, this is just the rumor, it's going to be TTNet, okay? Yeah, we do have lease options. If you click on the order page, there is a lease option there. It's $500 down and $200 a month. And if you decide that you want to buy it out after using it on the lease option, the $500 down payment will actually, I think it's $499, just to be very specific, because somebody will say that, you know, I'm cheating them $1, okay? The $499 down for the lease option, that can be applied to the purchase of the lifetime license. Yeah, I've heard good things about Sierra Jack, but we're not going to program it for it, unfortunately. I think it's going to be Xtrader, I believe, what the TT Pro platform, I believe it's Xtrader Pro. I think that's what it is. No, $499 does not include the first month. It's very late for me. $499 does not include the first month. It's $499 down, $299 a month. Okay. How about the training? Again, you will still get the. Let me go back to that. I better check on that. I don't believe you will get the over the shoulder with Kai on the lease option. Just let me take a look at that. One moment. And I'll just show you the member section as well. I'll show you the member section briefly here. All right. Okay, you do get the, here's the order page, okay? If you scroll down to the bottom of the order page, I'm just waiting for it to update in your screen. You scroll down to the bottom of the order page, lifetime license. The difference in the live training is you get 2 group live over-the-shoulder trainings with Kai, whereas with the lease option, you only get 1 group live over-the-shoulder training with Kai. Okay. All right, so those are some of the differences. All right, so that's the order page. The order page, my Skype, and everything your go-to should be flashing. It's all in there, so you can just click on that to go to this specific order page. I gotta get them to change my URL. That's just too long, man. I gotta get them to change the website, just JTrader or something like that. Yeah, the only current option is NinjaTrader Dan, but yeah, I think it's gonna be on Xtrader for TTNet. Ninja only, Brian. Ninja only for now. Okay, any last minute questions? We're 2.5 hours in. Let me just go into the member section and that will be it. You too, Skip. Enjoy your weekend. Good to see you at one of my webinars again. On the lease option, it says 10 hours of videos, not 30. Yeah, that might be the case. No, it says 30. Convenience lease, on-demand library, over 30 hours of on-demand video. You used the link, right? You clicked on the link, Sally? Because on mine it says 30 hours. I'll refresh my page just to make sure. Very welcome, Najam. Enjoy the rest of your weekend. On the next page when ordering, okay? Kai, are you still with us? I want to ask him about that. email me on that, Sally. j@ninjaorderflowtrader.com, and I'll look into that for you, because if there is a discrepancy, we have to correct that. Okay. Oh yeah, of course, Apurva. I do these webinars 3 or 4 times a week. Usually Monday night, Tuesday night, Thursday night, and Saturday night. Or pardon me, Saturday morning for most of you guys. Saturday night for me. Okay, any last minute questions? Anything else you want me to take a look at before we're done? Yeah, as soon as you purchase and get your login, Rich, you'll have access to the videos. Okay. And also email me if any of you, whoever's going to actually purchase today, whether you're going for the lifetime or the lease, please let me know. Okay, email me or Skype me. Okay. So I want to make sure that I'll email the office and make sure that you're getting your information. Great product, yes, Sally, it is. It's a great product, absolutely. Yes, as soon as you're done ordering, Dave, the office should email your login. Okay. No, no, you shouldn't have to wait until I wake up. I'm actually not. I'm not part of Ninjacators. Okay, I'm actually an affiliate. All right. Chosen by Kai to help market the NOFT and recruit traders. Okay. Yeah, exactly. I don't sleep. This time zone is actually great for trading because I can see what happens around the Asian Open. I can also look at the European and London session in the afternoon, and then basically at nighttime until midnight. Midnight or 1 o'clock is usually when I'll turn in, which is during the U.S. mornings. So that's great. I'm using the NOFT for 1 week, but do not have access to the members area. What? Dave, email support@ninjaorderflowtrader.com. Support@ninjaorderflowtrader.com. It may be because we do have a 14-day money-back guarantee, so you might not be getting access for that reason, but I don't see why you shouldn't be getting access. Okay, so just email them just to make sure that that's not the reason. Yeah, no capital gains tax, no tax on interest, no tax on dividends, no tax on property. There's a stamp duty. Yeah, no taxes here, man. Adele, email support. That's not acceptable. Okay. If you guys are having any issues with getting into the member section, which I'll show you right now. Where's the member section? And that will be the end of the webinar. And I'll log in. Here we are. Email support and copy me. Okay. Just so I make sure that there's some kind of follow-up. Okay, so you get your email and password. Here's the member section. Please, when you've got your order and got your email and password sent to you, please read this thoroughly. Okay, read the instructions. Okay, read the instructions. Can't say it often enough. Read the instructions. And for the most part, I would say the first thing you want to do before you download this and start monkeying with it, okay, for want of a better term, because I know a lot of us have been around the trading circles for a while, and we like to maybe look at a new indicator and kind of tweak it and just look at what it's doing. Please, 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 go through all the videos first. You'll be doing yourself such a huge favor. Go through all the videos first. There's 30 hours of video in there plus, okay? We did not put it there in fluff, just for fluff, okay? It's not, the little toy you get with your Happy Meal, okay? It's the burger, okay? It's not the salad dressing, it's the actual salad, okay? It's not the gravy, it's the steak, okay? You got to go through that first, okay? I highly, highly recommend going through the videos first, okay? Question. I need some help to correct the settings in CLGCZB. That's what you want to do, Christine. Part of that is if you go into NinjaTrader Files, you click on NinjaTrader Files within the members area, you scroll down all the way near the bottom, and there's actually chart templates to download here. Okay. So scroll all the way down to the bottom here in the member section, and you've got specific chart templates that are going to give you templates for the ES, the NASDAQ, the Russell, the YM, the DAX, gold, crude, euro, the bonds, and the 10-year. Okay? So that's chart templates. You can have, if you like Kai's chart templates for the Ghost Eye Block and Market Profile, you also have access to download his templates. For the workspaces, you also have entire workspaces, okay, for each market. All right. And the thing about the templates, Christine and anybody else, the templates actually have the settings built into them for each market. Okay. We also have a specific file, a PDF for if you want to have, if you just wanted, block trades on a certain chart, whether it be the Ghost Eye Block or the just regular block trades. There's actually a PDF in there giving you the settings. How are you different from OFA? I wonder if Kai's in here, because he actually kind of touched on that earlier. Is we're not trying to put a cylinder into a triangle, a triangular space, or square peg into the circular hole. Okay. Whereas with their particular chart setup, it's not time-based, which has its own advantages, but we prefer to let you decide what kind of charts you want it to have it on. And by the way, I do have a lot of respect for those guys, because they were kind of one of the first groups to kind of promote and push order flow out to the retail space, in addition to Market Delta. So, but we're just completely different about what we're watching and how we're doing it, and the customization that we're allowing users to have. That's a lot to do with it. Okay, Jay, are all the settings? Kai's just emailing me. He has to email. All good. Almost done. Okay, are all the settings that you use on the NOFT are the ones in the members area? Yes, Jack, they are. I'm using the templates. Every chart that you saw today that's mine, which was mostly crude. Let me find another one. I have my ES. Here's my ES. Here's my ES template. Same deal. Block zones, stacked imbalance, aggressive buyers, aggressive sellers, the delta tracker, the volume composite on the right side, the reversal signal algorithm, and the delta average. So I'm practicing what I preach, guys. Use the templates. You save yourself a lot of time and headache. Yeah, there's some markets that are similar for the settings, Christine, and that's why they're kind of grouped together. So like for, let's say like the NASDAQ and the Euro, you've got, I'll actually show you. Let me see here. Where is it? So if I actually go into my Ninja Templates folder, okay. If I go into my Ninja Templates folder, so go to Documents, go to NinjaTrader 7, click on Templates, click on Chart. These are all the templates that you're going to be able to download, okay? These ones here that let's see, can I highlight those? Yeah, I guess I can. Here. All right, here. So certain markets kind of are similar in terms of the settings that you want for the volumes and difference. So we've actually got an execution template, an iBlock template, and a structure template for each set of markets. So for the crude, the Russell, the Dow, the gold, all those settings can pretty much be left the same. You can tweak it a little bit, based on what you're using, what you're watching, okay, in terms of time frames or tick charts or whatever. But we suggest that, you can use it on these particular time frames or style of charts. So, for example, crude, Russell, Dow, gold, the execution chart is on a 3-minute chart or 4 range or 233 tick. Your ghost eye blocks, you can put those on a 16 or a 30 range. Your structure, you can put that on a 1440 minute or a daily chart, okay? And then we've got specific templates for the DAX, a joint template again for the NASDAQ and the Euro, and a joint template for the bonds. So I hope that answers your question. Jay, thank you so much. Got to get going. Great stuff. Talk soon. Thank you, Jack. I actually really appreciated your questions, Jack, and your continued follow-up. I like that. Okay, it actually helps me to tie up the webinar in a very clean fashion. Okay, your advantage is using Renko charts or range or tick. What's funny, Trader M? I actually have their stuff. Okay, and what's funny is I can actually put the NOFT with. I just have to adjust the sizing and some of the spacing stuff. But I've actually tried that. I've put the NOFT on their particular style of bar chart. So you could actually theoretically, if you have their stuff already and you like it, but you're thinking that you want to get the NOFT too, you can actually do that. You can put it on their you can put it on their style of bar, and it'll work. So you could actually have their style of bar and actually have the block trades and the zones. I've done it before. It's kind of funny. All right. So are we done, guys? So I've shown you the member section. You guys got all the links. You guys got all the way to contact me. I have that one too, Trader. I've got the GoMe as well. So I've seen them all, and I just, for me, and I'm not just saying this because we're selling it. I actually, it's how I trade. So, and it works for me. But whatever works for you. You're welcome, Chris. Welcome, Sally. Thank you. Appreciate it. Very welcome, Rich. Look forward to hearing from you guys. And seeing you on the other side of the membership. Thanks, Apurva. Very welcome, Bob. Good night, everyone. Good night from Hong Kong. Good day to everyone else. Have a great weekend. Thanks for joining, and I'll see you next week.